Data collection and time interval. Stock prices are measured every hour over a 6-month period. To make the analysis manageable, only a selection of these observations is used, as not all data points will be included in the final dataset. To understand stock price behavior over time, moving averages are calculated with various time intervals. These moving averages can be calculated for different numbers of observations, such as 80, 90, 100, 200, and 300 hours. OMX index. The Swedish stock index OMX is included to provide a contextual comparison. It helps understand whether changes in the bank index are part of a broader market trend or specific to the banking sector. By comparing the bank stock index with the OMX index, you can see if bank stocks are following the general market trend or moving in the opposite direction. If the bank index underperforms relative to the OMX index, it could be a sign that the banking sector is weaker than the broader market, or vice versa. The first graph reverse to mean helps identify potential buy opportunities by showing how much the index deviates from the historical average. The second graph stock price change provides a detailed picture of price development over time and compares it to the market index to assess sector performance in a broader context. Together, these analyses offer a deeper understanding of the current position of the banking sector and can help investors make more informed decisions. Adjustment for dividends. To get an accurate picture of stock price development, prices are adjusted for any dividends that occurred during the measurement period. This eliminates the effect of dividends on the observed prices, percentiles, and distribution. Bank index. The bank index is a weighted average of the 6 largest banks in Sweden. This index provides an overall picture of how the banking sector is performing. The prices around the moving average are divided into percentiles: 1%, 2%, 98%, 99% based on their relative position around the moving average. This creates a distribution that shows where each observation lies in relation to the moving average. An observation at the 1% percentile is well below the moving average and may indicate a buy signal unless there is a reason for the large deviation from the mean. Similarly, at the 99% percentile, it may suggest that it's time to sell. Reverse to mean graph. This graph shows deviations from the historical average. It illustrates how the bank index deviates from the historical average at a specific point, around 300 hours. The deviation is measured by how much the index differs from the average index value, and these deviations can be compared to various moving averages for a more nuanced view. Market. This overview aims to provide a basic understanding of how the model works on real stocks and stock prices, and how to follow them. The focus is on stocks from the Swedish market, as well as some from the US, Germany, Norway, and Denmark. To facilitate the study of these stocks, it's important to understand how to use stock prices, key figures, and graphs. Stocks. We will study stocks mainly from the Swedish market but also explore examples from other international markets. This provides a broader understanding of how stocks operate in different economic and geopolitical contexts. Graphs are used to visualize stock prices and other data over time. They can help identify trends and patterns in stock prices, which are useful for analyzing a stock's historical performance. Evaluation. To assess the model's effectiveness and adjust the strategy, continuous evaluation of the outcomes is necessary. This includes analyzing historical data to determine whether previously identified signals were successful, and adjusting future buy and sell signals based on new observations and market changes. Interpretation and strategy. Identifying buy signals. Stocks that are at the lower end of the observed distribution and have remained there for an extended period may be good candidates for buying. The hypothesis is that these stocks are heavily depressed and may revert to the mean or even surpass it. Using various online resources, you can easily find information on stock prices, key figures, and graphs. This material is important for building a solid foundation in stock analysis and understanding how stock markets operate. Selling strategy. A strategy for selling stocks must be developed. Sell signals can be based on stock prices rising to a certain percentage above the moving average or when the stock price reaches the upper end of the distribution. Timing the sale carefully is crucial for maximizing profits. Possible interpretations. When the index deviates significantly, especially when it falls below the 5th percentile, it may indicate that bank stocks are undervalued relative to their historical average. This could signal a potential buy opportunity for investors. Stock price change graph. This graph analyzes stock price changes over the past 500 hours. The price is normalized to the start point marked by the black line, meaning changes in the price are measured relative to this start value. Nordea, sub, Nordnet, Swedbank. The four bank stocks Nordea, Nordnet, SEB, and Swedbank have shown significant deviations from the mean. If purchases had been made according to the Eversemian portfolio strategy, based on the purchase date and acquisition price, the stocks would have increased in value by 8.1% in a month. This highlights the potential for portfolio growth in a short period. When a decision to buy or sell a stock is made, it is recorded in your Google Finance portfolio. This is done by adding or removing stocks from the portfolio on Google Finance. Monitoring holdings. Each individual holding in the portfolio can be tracked via Google Finance. This means you can see the current price of each stock, its changes over time, and other relevant financial data.